On behalf of NISM and India Bonds, I would like to take this opportunity to welcome you all for today's webinar, which is on bond investment strategy. Myself, Neha Deshmukh, working with NISM. Along with me, today we have a renowned speaker from the industry who will be taking the webinar today. We have Mr. Vishal Goenka, co-founder of India Bonds, and Dr. Kapil Shrimal, Associate Professor at National Institute of Security Market. Before we begin, let me allow to give a quick introduction of our speaker. Dr. Kapil Shrimal is an Associate Professor and Program Director at National Institute of Security Market. He is having more than 16 years of experience of academics and 1 year of experience of corporate. He has started his career with ICICI Prudential, LIC, and worked with the institutes like Prestige Institute of Management and Research, Indore, Symbiosis University of Applied Science, Indore, Marwari University, Rajkot. Dr. Shrimal has done his PhD in management from Mohanlal Sukhediya University, Udaipur. Mr. Goenka, he is a seasoned expert with over 20 years of experience in the fixed income currency and credit market. He has held key leadership roles at global investment banks such as Deutsche Bank, Merrill Lynch, and RBS, operating across major financial hubs including London and Singapore. Vishal's extensive background covers sales, trading, and credit trading, with notable experience at Deutsche Bank in Singapore and Merrill Lynch in London. He also holds an MBA from prestigious London Business School. Once again, a warm welcome of our today's both our distinguished speaker. Some important announcement for the participant. We will take all the question at the end of the webinar. So please submit your queries in Q&A board. All the participant will receive certificate within 3 to 4 days. The recording of the session will be available on the NISM Academy YouTube channel. So now, without further delay, let's begin. I would like to hand over this session to our speakers. Over to you, sir.
Thank you, Neha. On behalf of India Bonds, I would like to welcome all of you. This is our 6th series on fixed income with Dr. Shrimal. So thank you, NISM, for that. हमारा humble effort रहता है to educate people, and it is actually thousands of you registered for this. So that's really good to know. Today's session, I think, is a little advanced session हमने लिया है. We've taken on investment strategies, bond investment strategies. However, all basic questions are welcome. Dr. Shival, we already have 200 questions that have come. कुछ काफी basic है, which we'll answer, and then we'll delve into that. Please stay back for the Q&A. That is usually the most exciting. आपको सीखने काफी मिलता है as we are investing this time. So over to you, Dr. Shrimal, to start.
So thank you, Neha ji, thank you, Vishal sir. So starting with the topics to be discussed today. So as a part of the session that we have planned, that very start with the very basics of the bonds. What are the various types of instruments, especially the bonds which are available into the market? When you create your portfolio, so what are the strategies you will use for creating a portfolio, and the risk profiling will be there. And the last we'll take about the live demo with the Q&A. So can we start with the first slide of the discussion today as a part of the today's topic? So yes. Now, as we all know, even some of you might have attended the webinars earlier also, but what is the basics of the bonds? So bond is nothing but the company just issue an instrument to the lender. So lender are the investors like you and me. Company is a borrower for us. It generally issue at a face value of 10,000 rupees as per the new regulation. So face value, let's take an example, 10,000 rupees. If you invest 10,000 rupees to the company is going to give you the interest. The interest is the predetermined, the fixed rate of interest. The frequency can be monthly, quarterly, half yearly, something like that, based on the nature of the instrument. So the company is going to give you the interest till the maturity. At the time of the maturity, it will redeem back. So it means 1,000 or 10,000 rupees will be back given back by the company to you. Once this bond will be issued, compulsory the credit rating agency is required. Rating is required. So when we take about the rating, it can be the AAA to the BBB minus are considered. So below BBB minus can be the considered non-investment graded. So till BBB minus can be investment graded securities will be there. And this instrument is nothing but you are giving a loan to the company. So like this, it will work and regular interest will come to you. So very simple instrument as a part of the investment into the market. Now we'll say about the, can we go to the next slide? Yes. So when we are investing to the bond market in India, so broadly, bond market in India is divided into two parts. Number one is the GSEC, number two is the corporate bond. So GSEC are the government securities. When it's about the government securities, the instruments are issued by the Reserve Bank of India on behalf of Government of India. So this GSEC is known as dated GSEC, or some state development loans, like state government also need a money, so they also raise with the help of Reserve Bank of India, and the treasury bills to manage the working capital especially. So every week RBI is coming with an auction of the T-bill. So these three first part, GSEC will become as a part of the government bonds, will come as a part of the platform of the Reserve Bank of India. Then the corporate bonds will come, that will come under the regulations of the SEBI. So when we'll say about the state guaranteed bonds, it means any state government company which want a fund, so they can take the fund with the as a part of the corporate bonds, PSUs, bank bonds, NBFC bonds, or any other corporate bonds, company bonds, multinational bonds, any company wants us. So the government bonds are regulated by the Reserve Bank of India, and the corporate bonds are regulated by the SEBI. And the platforms for both the bonds are available in the market where you can invest. And the nature of the instrument, rating of the instrument, depending upon their nature, depending upon their maturity, depending on upon their interest rate, that will be decided at the time of the issue. Anything you want to add over
And
it?
I'll just add an example for clarification. So let's assume that Kerala state government issues a bond that is called an SDL, and it is typically guaranteed by the central government. But if Kerala company like public sector, like Kerala Infrastructure Development issues a bond, it is guaranteed by the Kerala state government. So it is deemed to be a corporate bond. There is no central government guarantee.
Yes.
That's why state guaranteed bonds are more like corporate bonds. But Government of India guarantees on the left, government securities, SDL, T-bills, they are all guaranteed by the Government of India.
Government. Even the this municipal bonds also comes at the part of the corporate bonds.
Corporate bonds, yes,
Corporate
absolutely.
bonds. So next slide, please. Now, again, this is most important part because we are going to talk about the strategies. So this content is basically for the educational purpose only. So the view expressed are personal and should not be considered to be recommended to buy or sell any instrument into the market. So please consult with a financial advisor before making any investment into. So because we are not a financial advisor, we are only educating you how to invest and the instrument, about the instrument. That is our main purpose. Okay, next. So now over to you.
Yes, so before talking about, today we will also give you a live demo as to how to invest in a bond. What is can you move the slide up, please? The first slide. Yeah, so we also want to talk about, we'll tell you how to buy a bond. We'll explain a lot of theories or questions that have already come to us. As I said, we have 200 questions. But an ideal portfolio allocation, जब हम सोचते हैं, when we think क्या होना चाहिए, when you're younger, maybe you have not had enough money to buy real estate. So we've kept real estate out, but usually you're looking for growth. So 70% equity, 20% fixed income, 10% in alternatives. Well, alternatives could be gold, crypto. We are not going to discuss that. But as you grow older, I think ideal investment portfolio, आपका पूरा investment portfolio should have a balance of different asset classes, because her asset class ka return and volatility is different. They also say that's a 30-70 rule. When you are 30 years old, have 30% in fixed income. When you're 70 years old, have 70% in fixed income. So your intention as you grow older starts moving to capital preservation also. And fixed income is a regular return asset class. You definitely should be in equity, real estate, but this is typically how an investment portfolio allocation looks depending on what stage of life you're in. I think we have a poll question now. We want to keep this interactive. So let's run a poll, please, on the screen. Question: do you have following in your investment portfolio, just to understand how our panelists are? Equity, fixed income, real estate, all of the above, or you can say, I don't have any investment portfolio. So please vote. All right. 5, 4, 3, 2, 1. Thank you. We will announce the results of that during the course. Let's move to the next slide, please. So today we're going to talk about bond investment strategies. Now, again, before I start here, I want to clarify a few very basic questions that has come in. Professor told, Dr. Shrimal spoke कि आपके लिए bond के लिए क्या important है? The face value, the coupon, the rating we'll talk about later. But people also ask me, is there a lock-in? Investment in bonds has no lock-in. It is like any security, you can trade, buy and sell. Government securities, there are like 15 to 20 billion dollars का volume होता है रोज इंडिया में. The bond market is 2.7 trillion dollars. Just to give you an idea. So there's no lock-in. The second concept I want to clear is people are secured versus unsecured. Uh, Secured bonds mean, company has put a collateral. Just say if you gave money to your friend, he said, okay, if I don't give you my money back, you take my laptop. So that is a secured lending. But if he says, give me the money, I'll give you back, that is unsecured lending. So we will go in detail as to how you build a strategy around these, and in very simple terms explain to you that depending on what you require, what your situation in life is, you can plan a strategy around that. The results of the earlier vote are out. Most 40% said they have equity in their portfolio. Only 8% have fixed income. 40% said they have everything, which is amazing: real estate, fixed income, and equity. 15% said they don't have an investment portfolio. Very interesting. So this is a good audience to talk to. Next slide, please. Ladder strategy. Ladder strategy simply means कि when you are building a portfolio, don't buy everything which has the same maturity. कि मुझे खाली 2 साल का bond खरीदना है. If you want to be a constant fixed income owner, you should stagger your maturity. So you should buy a 1 year bond, 2 year and 3 year bond. After 1 year, the bond will mature. You may buy another 3 to 4 year bond with that. The benefit of this is that you are a long-term investor. You're not subject to the interest rate being high or low, because since you're reinvesting every year, आपका जो principal है, this gives you a very good benefit of being immune to interest rate moves, but also earning a lot of regular stable income. So this ladder strategy reduces sensitivity to interest rate. Next, please. One thing very important, as I said, in bonds is about credit ratings. Very simple. अगर when you have a high CIBIL score, तो आपको बैंक कम पैसे में borrow कर सकते हो. When you high CIBIL score, you can borrow at less money. If you have a low CIBIL score, your borrowing is expensive as an individual. Similarly, companies have credit ratings. A high credit rating means the interest rate will be low that you will get. Here is some examples. Central government bonds give you 6.5 to 7%. AAA give you 7 to 8. The more you move into the lower ratings, from the green to yellow to red, you can see the interest rate starts moving higher, which also means the risk is higher. Highly advisable not to invest for individuals below triple B. Triple B भी please समझ के करिए. These are highly risky securities. Do not get fooled by 15, 16, 17, 18% return. These are very high risk securities, not ideal for retail investors. Next, please. Barbell strategy. Barbell strategy को हम कहते हैं dual maturity strategy. So a lot of times, people ask, Vishal, what should I do? Now you have to remember, and there are a lot of questions around the views on RBI has cut rate, where are we? So we will explain some of this stuff. So barbell strategy is, for example, you buy 1 or 2 year maturity ka high yield paper. So you earn 10 to 11%. But if you want to earn capital gains from interest rates coming lower, then you buy 10-year and 50-year long maturity government security. Because typically when interest rates come lower, government securities rally a lot. So for example, अगर आप अभी GSEC खरीदे, government security 675 पे if you buy, and interest rates go down by 100 basis points or 1%, your bond will appreciate by about 7 to 8%. So you will make accrued interest of 6.75 plus you'll earn 7% on any capital gain. So barbell is, you earn 2 year mein you earn a very high interest earning instrument, and you buy a 10-year or long dated government security to give you capital gains. Next, please. Bond portfolio strategy. So typically what we say within the bond portfolio, you should actually have a strategy across different credit rating metrics. तो usually मुझे सवाल पूछा जाता है कि अरे if I want to sell a bond immediately, can I sell? Okay, the liquidity in high yield bonds is less, in government security bonds is the highest. So the way you should construct your bond portfolio or a fixed income portfolio, कि आप actually 10 to 20% fixed deposit में भी रख सकते हैं, because this is like cash. So if you need it tomorrow, you can break and get it straight away. Then you should have 20% in long dated government security, because again, government security can exit at any point of time. 20% should be in high yield. ये आपको 10, 11, 12% दे रहे हैं. Building a portfolio helps in diversification, right? And the bulk should be between the investment grade, as we call, between 8 and 10% double A to single A securities. So, right from government securities risk free to triple A to single A should be part of your portfolio to help you diversify your entire portfolio. Next slide, please. A strategy, market timing strategy. Very importantly, this shows RBI ka repo rate, RBI's repo rate over the last 20 years. If you see, interest rate cycle moves in 3 to 4 years. So 2008, growth was strong in India. Financial crisis hua, aggressively rates get cut. So typically, when financial crisis happen, equity markets sell off, but bonds rally. So it gives you a good hedge against market volatility against equity. Because जब crisis होता है, all central banks cut rates. So what the bond portfolio will start outperforming and giving you good capital returns to buffer your equity portfolio. Also important to see, banking crisis where rates were cut, ILFS crisis, COVID again was a global crisis. Aggressively, the interest rates got cut. And then the interest rates were kept at a low level post COVID. Ki growth comes back. After growth happened, the global inflation, where you say rates went up. So again, RBI just cut rates last week. Our view or my personal view, and I can ask Dr. Shrimal, is this will be a shallow rate cut. Shallow matlab growth is very good globally. So maybe we cut another 25 to 50 basis. But if you see, the rate cycle has changed for 2 years. So this is a very, very good time to buy fixed income, given the equity market volatility also. Government securities thoda rally kar chuke hain after RBI rate cut, but corporate bonds are still giving you a good, very good spread. So market timing, people who think ki acha abhi market volatile hai, so let me time it. Interest rate cycle RBI has started, which will go in that direction now, because central banks take 1 or 2 years to move the direction of interest rates. So let me take my money off another risky asset classes and let me put in fixed income. Timing is pretty good right now. Next, please. क्रेडिट कर्व स्ट्रेटेजी बहुत सिंपल कॉन्सेप्ट समझाने के लिए किया है. अ क्लासिक कर्व, इफ यू सी yield and maturity is higher, which means you will charge more money for lending money for a longer period of time. So अगर एक साल का रेट 7% है, then 3 years will be 7.5, 5 years will be 8.5. Sometimes you have an inverted yield curve. What does that mean? So people used to write a lot कि US में inverted yield curve हो गया. So inverted yield curve happens when you anticipate that future interest rates will be cut in the economy or recession aega. This happens in developed economies. In India, in government bond, you don't see inverted yield curve much. In corporate bonds, you have inverted yield curve. When suddenly there's a bad news on a company, तो एक साल का yield बहुत ऊपर चला जाता है, right? So it goes to 12 to 13%. That if the company has to have trouble, it'll be in the next 6 months. Otherwise, it'll be very smooth. So you can actually, if you believe in such, you believe in a company which has had bad news, you should invest in that at that point of time. Next slide, please. Should we go up and have another poll? Are we launching a poll? If not, let's move to the next slide.
Yes.
Simple question: which strategy is suitable for you? अगर आपको समझ में आया हो, ladder strategy whereby you invest in periods and reinvest in periods. Barbell strategy where you invest in the short term and long term. And one strategy we didn't talk about, bullet. It's an event. मतलब 5 साल बाद मुझे पैसे चाहिए for education, marriage. Then you buy everything when the money comes in, which matures a specific period of time. So please, panelists, please vote. We will announce the results. Over back to you, Dr. Shrimal, on the next slide.
Yes. So thank you, Vishalji, making them understand what are the various types of strategies and how it can be used. Now, when you create a strategies, everything or what you strategize, it should be linked with certain benefits. Okay, so what are you planning? It should be linked with certain benefits. So the benefit number one by doing the bond strategy is that the risk management. To minimize the risk is the objective of each and every investor. So as we discuss about the barbell strategy or the bullet strategy, various type of strategy, it will help you to minimize the risk. You can minimize the risk based on the time period. You can minimize the risk based on the maturity, based on the interest rate. So that is there. So proper for minimize the risk, diversification of the risk will be there, and it will hedge about the interest rate changes. So as Vishal ji has told, The last week there was a rate cut by the Reserve Bank of India. So how it will impact on the market or the bond market? Definitely, if the rate cut will be there, the yield of that particular bond will be go down, and the expected price rise will be there. So it will hedge the price risk. It will cover the price risk also. Then second benefit will the optimization of the result. So when it's about optimizations of the returns, it means maximization of the yield. It means whenever the yield will go, the returns will be higher. It will optimize your returns, so that will increase the yield of the investors. Then it will help you to manage the liquidity also. So to liquidity management, so if you want to convert your bonds into the cash at any point of time, so as Vishalji also told, if you are investing in triple A rated or the GSEC, it will help you to liquidate also. It will also give you the flexibility into the market. Okay, so whether the availability in the secondary market or not, so that will be also help. It will always announce the portfolio stability. So when the diversification is there, definitely some point of time the equity market will go, some point of time equity market will not perform, and you invest in the bot of the asset class, it will help to stabilize your portfolio. Stability of the portfolio will be there, and the risk return profiles. So combination of the different strategies will help you to how the investor will reduce the risk, or how the investor will balance the risk between the returns. So as we discussed in the previous slide also, if you have the 2 year shorter time period, you can invest in the higher yield bond. For the longer time period, you can invest in the lower yield bond. So that will be terrorize your risk and return objective into the market. So next slide, please. Now, especially when we are investing into the security market, so anything investing in market is subject to the risk involved, that is underlying risk. Some of the major risks which are involved into the fixed income security, that can be the liquidity risk. If the yield of that particular instrument will go very high, or the inverse relationship will be there, or inverted yield is there, at that point of time the liquidity risk can be there. Or any instrument which is not listed into the market you're investing, that there is a liquidity risk is there. So you have to make sure when investing into the fixed income security, the liquidity is there, and liquidity will be done in the secondary market. The second risk is the fraud risk. So if you are investing into the unlisted, especially the bonds or the platforms which are not regulated by the SEBI, again, there is a risk of the fraud will be there. So whenever investing into these fixed income security, you have to invest through the proper channel always. Then the market risk. So yes, market risk is the major risk into these fixed income security. So whenever the market rates cuts will be there, or the market rate will went up, it will affect the yield and the price of the bond. So let's take the very simple example. Suddenly last year and before that, the Fed has increases the rates. So due to the increasing of the rate of the Fed, the underlying asset of the US government, the price of that went down, and you can see some of the banks has faced the difficulty into the market of the fixed income security. So market risk is a major risk, and the credit risk is there. So whenever the credit rating agency change the creditability of the bond, it will affect the price and liquidity of a bond. Okay, the price of that particular asset will go down. So these are the major risks. Apart of this, there can be the geopolitical risk and other types of risks also there. But yes, majorly when you're investing into the fixed income security market, you have to think that which risk is that you can bear and how you can overcome with this particular type of risk. Next, anything you want to share on this, Vishalji?
No, absolutely. I want to clear one perception which has been in investors in India 10 years ago. This is not, bonds are not guaranteed, not assured by anybody except government securities. When you're buying corporate bonds, there is a reason why you get your return. So please be clear that there are always risks to investment in securities. Bonds as an asset class has less volatility, so it's suitable for your portfolio given uncertain times or more volatile equity markets. Let's move on.
Yes. Next slide, please. Yes. So
we'll give you a quick 5-minute demo because people think bond kahan lena hai, kaise kharidna hai. It's very difficult, and we just want to give you a live demo of how actually you can buy a bond. There is since we are talking about strategy, someone wrote a question, what is a bond case? So, a small case is very famous in equity. You can also actually DIY, आप खुद से अपना एक portfolio 1 minute में create कर सकते हैं, and we'll give you that demo on that. So we'll share our screen very soon and show you how you can buy a bond very, very quickly. because I don't know any other website, we will go to India website, India Bonds website. यहाँ home page पे है. Scroll down a little bit. So to making it easy, we have curated as per offers and categories. So you can see new arrivals, आपको high yielding करना है. You can just choose state guaranteed bonds. Some people want to invest from 10,000. Some want to do GSEC and SDL. It's very easy to choose your bonds here. Please click on Crazy Bee, read more, please. So for example, this is a fintech, it's NBFC. Apologies, you need to just log in here. So simply, actually, once you click on the bond, obviously you have to KYC on the platform, and KYC takes 3 minutes. You click on the bond and you just go to payment, which is through a payment gateway. One highlight thing I want to highlight, this is better than equity market. Equity market, when you are buying an equity, you pay your broker the money and he transfers the securities to you, right? In bonds, the money does not touch any platform. Please make sure it's SEBI-regulated platform, and your money goes directly to the National Clearing Exchange. So that's it. You see how many bonds you want. In this case, for example, you're buying one bond. As of now, the market is closed, so you can do an AMO, aftermarket order. Basically, you can buy bonds 24/7. And as soon as you click buy, it goes to the order gets executed like an equity market in the next market working day. Let's close this and let's go to the product section, please. Similarly, just go to fixed deposit, click on fixed deposit. Fixed deposit is an important part of your component. Nowadays, there's digitally fixed deposits. Please scroll down. For example, on this platform, Shriram and Bajaj, you can compare the rates. You can just click on open FD and it is similar process. If you're KYC'd, you can choose a 10-hour maturity or आपकी FD place हो गई. You don't have to go anywhere. There are no forms to fill. Everything is digital. Can we go to bond case now, the product? On the left under product, bonds case. So this is a very good, just scroll up a little, design platform tool whereby you say, I don't understand bonds, I want to start. So I want to start, let's say, with 3 lakhs. Just press on keep, or 5 lakhs is fine. You can start from as little as 50,000 and you view bond cases. So आप कह रहे हैं कि मुझे एक bond नहीं खरीदना है, I might as well buy a portfolio of 5 bonds. You can choose the themes here, high yielding, monthly income, short-term bonds, public sector. Let's click on public sector, please. Here, if you see, so it's ranked by ratings. Actually, can we go back now, please? Can you go back to the previous page and choose something else? No, just go back. Yeah, go to high yielding, please. Yeah. So when you go to high yielding, you will see that top 5 bonds are selected for you, highest yield to lowest yield. यहाँ पे, let's say, you say these are 5 bonds. You say, okay, I don't want Satya. Just unclick Satya, please. If you see your total settlement amount on the top is there, 3,91,000, average maturity of your bond and the weighted average yield of your bonds are there. Go down again. You say instead of Satya, I'll take ESAF small. So tick ESAF small finance bank. You see automatically आपका calculation आ गया. 5 lakhs your average maturity. What is the yield? Again, when you press request order and pay, I think this is the only platform in the country where all the 5 bond payments will be done in one go. So you can create your entire bond case exactly like that. For more education material, can you go back to Bond Uni, please? This is an interactive website. Go to blogs. You can actually search any item. There are 100 more original content written out here. There are a lot of students who come to these. You can actually search any terminology and read about it. Go to videos. There are a lot of videos that are uploaded, which are educational videos and podcasts. Issuer notes. So very interestingly, this is a fact sheet of about 20 to 30 companies, NBFCs, जो हमने लिखा है through public sources. So sometimes you want to know what does Manba Finance do. You can actually come and track all these issuer notes. It'll give you the basic fact sheet about this. So basically, this is how you can practice yourself, buy a bond in 5 minutes, as you buy equity and mutual funds in this country. Can we stop sharing this screen now and move on to the next section? So I think Kapil ji, this is about amazing fixed income courses जो NISM करती हैं. You are
Yes.
obviously leading that. Love to hear a little bit about that for people on this
Yes.
audience.
So,
Remember,
yes.
we have a big Q&A coming up, and we will talk and take a lot of your questions.
So
Yes.
again, if you want to learn something more about the fixed income security market, so we have created some e-learning modules along with the FIMDA, where you can, there's self-paced learning courses are there. You can just register and you can go through the videos and you have to attempt for the exam, and you will get the certificate also from the FIMDA and NISM, and again the learning will be there. So these are the some of the till date that we created the videos, and we are coming with some more series of the fixed income on this platform. Yes. Next, please.
Let's move on to the next. Okay, so now we come to, we do run it monthly. We just want to highlight to you our next session will be on 12th March. Happy to take input from our audience, what topic आपको चाहिएगा next month, and we can curate, Professor and I can curate it. We have done a lot of topics. You can find us on the YouTube of NISM or IndiaBonds channel. The past learning sessions we've had on basics of bonds. Let's come to the Q&A, please. Okay, so Kapil ji, बहुत सारे questions है. Couple of them are usual. You are a champion answering. Why to buy bonds and not equity?
We are not saying only buy the bonds, as we told in the slide also. When the portfolio is there, portfolio should be properly diversified. So as an equation is saying, the investment in fixed income security is nothing but the 100 minus your age. So if your age is, let's say, 40 years, so 100 minus 40 should be at least the investment into the fixed income.
Sir, difference between fixed income bonds and debt mutual funds.
So fixed income bonds, you are investing directly into the fixed income securities, and debt mutual funds, you are investing into the fixed income security, but with the platform of the mutual funds. So mutual fund company will decide what should be in the portfolio, and here you will decide what should be in your portfolio.
One question is, how can I short sell bonds? No, you cannot short sell bonds in the country. Only sophisticated investors can do derivatives. How do I avoid default risk? Maybe you cannot, nothing is certain in life except death and taxes, कहते हैं. Government bond is absolutely called risk free, right? So that is how you can involve. There is a highly unlikelihood of. तो एक सेकंड क्वेश्चन आया था कि इंडिया में कोई कंपनीज ने डिफॉल्ट किया है, तो देयर हैज बीन सिचुएशन, ट्रिपल ए कंपनीज, IL&FS, दीवान हाउसिंग व्हिच डिफॉल्टेड. जस्ट रिमेंबर कि ये 2020, इट हैपेंड 5 or 6 years ago, right? India was going through a different growth story and credit cleaning was happening. तो ये तो वैसे कहने की बात होगी कि निफ्टी वाज एट 8021, तो अभी 22 पे क्यों है, राइट? सो इंडियाज क्रेडिट साइकिल हैज रियली cleaned up, and I think there are many checks and balances, but still there's always a default risk. One question is the role of a trustee. Very good. When you buy a bond, trustees are companies that are appointed to manage कि भाई कंपनी ने बोला कि you're raising a bond, I will not breach this covenant, I'll do this return. The trustee's job is to monitor that and inform all the bondholders. So actually, if you buy a bond and have in your demat and one of your bonds, there's something goes wrong with the covenant, your trustee will call you or send you an email. And trustees are regulated by SEBI. So trustees are very powerful safeguard. Again, we always say आप regulated platform पे ही खरीदिए. Online bond platform SEBI regulated. उस पे ही खरीदिए. Sir, what does collateral and security mean in a bond, if you want to explain?
So collaterals and security.
What does a secured bond or collateral mean?
So collateral bonds and secured bonds, I will say simple, when at the time of liquidation, it will majorly plays a role.
Yes.
So when the company become liquidate, any point of time defaults basically, so the payment preference will be done likewise. So once the first preference will be based on the collateral securities, then the secured bond payment will be done. So that is one of the part. And when you are investing into the bond, yes, that is only one of the objective from my side. Vishalji, anything on this liquidation pay, that will be more important.
Liquidation. So basically, it's like a mortgage, right? The bank आपको mortgage देता है अपने घर के against. So security is a house. If you can't pay, it will take your house away and sell it. Not that it should happen to any of you, or your car or your bike. So similarly, if you have a secured bond of a corporate, in case something were to go wrong, there is a higher chance of recovery. One question है, bonds have long tenor, but rates are not attractive. Why? Sir, ये तो बड़ा मुश्किल है कहना. Rates, what are attractive rates? I was reading a study where Sensex has returned only 9% aggregate year on year, last 3 years. So government bonds usually have the long tenor bonds, and they have a yield curve. 10-year bond में भी 675 मिलता है. Corporate bonds are usually for short term only, because companies don't want to have expensive. Companies always think they're going to do better. So higher rates you get in the short end, right? We have compared bond mutual fund. One more comparison is, as sir said, कि आप direct bond कर सकते हैं. Bond mutual fund में क्या है? There is a expense ratio, there is a management ratio. The benefit is कि it is liquid. आप NAV पे you can exit, but you can try and recreate 2% more, 3% more if you do it yourself. Both are required, both are necessary for liquidity management. Debt mutual funds are really good. One question, how safe are investments A and below A? Sir, everything carries a risk. Safest is AAA. So you should do your own research. Thankfully on bond platforms, aapko analyst rating reports and information memorandum is there. You are getting higher risk return because you are taking higher risk. What is the role of government policy in bond market, sir, to you?
So the role of government policy in bond market, whenever the government policies are announced, they are announced with the macroeconomical prospects, especially to control the inflation or for the GDP, or to take a major liquidity into the market. So recently the rate cuts are there to maintain the liquidity, to provide the more liquidity into the market. So whenever the government will take any policy measures, it will affect the yield of the bond. So if the rate cuts will be there, yield of the bonds will be go down, and if the rates will increase, the yield will be gone up. So it will affect again the price of a bond. So if the yield will increase, the price will go down. So here you will take the opportunity of capital gain also into the bond market. That is the most important part when the government policies will be there. Otherwise, if you hold it till maturity, there will be the at par maturity only.
Question are, what are about tax-free bonds? Tax-free bonds in India were issued 10-15 years ago by public sector companies to enable infrastructure financing. Abhi issue nahi hote hain. There are secondary tax bonds which you can buy, where only the interest income is non-taxable, but they yield around 5.25, 5.5. There is another capital gain bond, 54 ECM kehte hain. Any profit you make from sale of real estate, up to 50 lakhs you can invest in 54 EC per year. They mature after 5 years. So it becomes tax-free and the interest is not taxable. One question, what is your suggestion? Again, we will not give you any recommendation. We are pure academician here. Perpetual bonds. Perpetual bonds are issued by banks to help their equity ratios for government. Typically, the history in India is no government-owned perpetual bond has defaulted. They give you a little higher rate, but unke call option hote hain. This perpetual will get called in 5 years. One question, do you have data on the history of AA, single A, triple B rated bonds going bust in India? Believe me, this is a technical question. I know that it is much lower than in the US. So in India, typically listed bonds in the last 5 years, post the credit crisis, is about 2%, 1 to 2%. जहाँ की हम developed world में 3 से 4% का annual default rate देखते हैं, and which is very, very accepted. Sorry, ma'am, I'll pass the questions to you as why investors only allowed to buy and not sell on platforms. Sir, you can sell on the platform. It is request for quote. Regulated platforms we are not allowed to show two-way prices like equity because we will be a deemed exchange. If you want to sell, you can request for quote and best effort, we'll find a buyer for you. Our family sold real estate. We have 45 lakhs. You want to invest in bond equities. What will be the ideal strategy? Sir, to you.
So again, we
right now.
We cannot provide the strategy to you for this. You have to consult to a financial advisor or investment advisor in this. But yes, if this corpus is there to, as Vishalji also told, if it is a capital gain, so there are the capital gain save tax bonds are there. You can invest in that part to save the capital gain tax only. A part of this, you can consult to a financial advisor in this.
Yes, but typically, as we said in the first chart, there should be a combination of different asset classes. Equity आपके view के ऊपर है. We are not equity champions, but I do think that fixed income, we are in the changing interest rate cycle of going down. So you can provide stability to your portfolio and divide it between that. Can I get bond credited to a demat account? Absolutely, bonds are owned in demat accounts. There are a couple of you asking question on specific issuer name. वो हम बात नहीं कर सकते हैं. We can't really address that. Any TDS deducted on bond interest? Yes, on listed bonds, there's a 10% TDS deducted on interest income. However, if you are a senior citizen, or you can apply for a 15G, 15H form to the company not to deduct TDS. So, and if you make any capital gains on the bond, they are charged at your long-term capital gains of 12.5% within 1 year. Sir, difference between fixed deposits and bonds, ये तो हर साल आता है.
हर बार. So again, answering this, fixed deposits are the saving schemes of the bank where the underlying risk coverage is 5 lakh rupees, that you can say. The bonds are the investment instruments. The difference between investment and saving will be there. So you are taking the extra return as compared to the fixed deposits. So risk is associated. But yes, in the FD, you cannot have the benefit of capital gain, the capital gain, or in the bonds, you can have the benefit of capital gains if the market cuts the interest rates.
And क्या होता है bonds में have flexibility, 1 year maturity, 2 year, 3 year, you can choose. There are only few corporate FDs and few bank, पर आप choose corporates, you choose कर सकते हैं, government bonds कर सकते हैं, so there's some flexibility.
And before maturity, if you sell the FD or redeem the FD, the penalty will charge by some
Usually there is a
banks. On bonds, there is no penalty before the maturity sell. That is
One question, one KYC is done. Can we proceed to deal in bonds? Can we download portfolio? So we do have a portfolio dashboard on IndiaBonds, which you can see everything. You can download an Excel spreadsheet for your filing things. So it makes you managing it well. We will also send, the system sends you reminders on cash flows also. Someone is saying, what is the most favorable strategy? Sir, strategy depends on your target. We've shown you different things. Taxation difference between bonds and debt mutual funds. We're not tax experts. We will not be able to tell you.
but now everything is same.
Which bond is less risky to invest? Risk-free government securities को ही बोलते हैं, सबसे होता है.
Yes.
Same questions are coming back. Is it good to invest in unsecured AAA bond? Very interesting question. Only very big, large companies or public sector bonds, banks, institutions will issue AAA unsecured. For example, REC, PFC होता है. In private sector, टाटा भी कर सकता है कि कि भाई टाटा सबको पता है तो मैं AAA हूँ, मैं सिक्योर नहीं करूँगा. तो अनसिक्योर्ड हाई रेटेड बॉन्ड्स में ठीक है, इफ यू नो द नेम very well. A senior secured bond is very simple कि if company में liquidation होती है तो the senior secured will get the money first, then the subordinated, then tier 1, then equity. So in that ranking, you are higher, you also get a smaller rate. Lot of questions on taxation. Sorry. If someone never invested and his age is 37, I'll leave this to you. Is he too old or too late to build wealth and achieve goal before 45?
So it depends how much amount you want to invest.
37 is not too old, my friend. There are a lot of guys who start their careers and change at 40, 50, even bade investors जो होते हैं, Warren Buffett and George Soros of the world at 40, 50. Companies have started at 40, 50 and done very well. So it's never too late to start building your wealth. Now over to you as to what to do. Haji.
So you should start investing from right now. So that is the right, anytime you start investing, that is the right time opportunity for you. But yes, if you could have invested like at the age of 20, so you are missing the 𝐒𝐩𝐞𝐚𝐤𝐞𝐫𝐬 of 17 years in this, that I can say.
But can I create wealth by 45, sir? We cannot comment.
Oh, no.
There is no guarantee in any asset class. If it was, then यहाँ पे इस सेशन में 1000 लोग हैं, सब रिटायर हो गए होते हैं अभी तक. ऐसा, there's no short guarantee. Do your diligence, allocate your portfolio.
Yes.
Again, question on demat. Yes, demat is mandatory for buying bonds. Can you suggest high return payable bond? We will not suggest single names. Usually single A or triple B rated bonds, आप जाके देख सकते हैं, has high returns up 10 to 12%. Very interesting. Are all credit rating agencies the same? And you've named CRISIL versus this. We are no one to tell you. What happens is all rating agencies are regulated by SEBI. कुछ rating agencies जो country में 20-25 साल से हैं, right? So CRISIL or ICRA you've named, and some rating agencies have come newer. So people sometimes differentiate on basis of that. But we are no one to decide who's better.
Someone
Give
has
an
written,
example of municipal bond. Indore Municipal Corporation का एक bond है, and I believe a lot more. Maybe I think Prayagraj का भी शायद municipal bond आ रहा है as per
yes,
public.
even Pune Municipal Corporation bond is one of
पुणे
them.
का भी होता है, तो cities के होते हैं municipal corporation. Why coupon rate and yield is different? I was wondering ये अभी तक आया क्यों नहीं? Sir, please, over to you.
So coupon rate and yield is different. Why? So simple logic is that coupon is the fixed interest on that bond company is giving to you, irrespective of the market scenario. But yield is the actual return. So in simple terms, it is IRR. If you're investing 100 rupees in a bond, you're receiving 10 rupees coupon every year, and you're selling that bond, let's take 110 or 90 or 800. So what is the actual return you are received on that bond till the maturity? That is a yield. So yield is a return and coupon is the interest.
Yes, so as said, coupon gets decided at the time of issue. अगर आप पार के नीचे खरीदे या पार के ऊपर हो ना, इट्स लाइक जैसे इक्विटी आईपीओ हुआ. अगर आप इक्विटी आईपीओ में स्टॉक नीचे गया तो यू आर गेटिंग अ डिस्काउंट टू आईपीओ, और ऊपर गया तो प्रीमियम. सो यील्ड इज एब्सोल्यूट रिटर्न. डू बॉन्ड्स हैव एसआईपी? सर, वेरी गुड क्वेश्चन. नॉट येट, बट वी आर वर्किंग ऑन डूइंग दैट, बिकॉज वो थोड़ा सा सिस्टम नैश वगैरह क्रिएट करना पड़ता है फॉर ऑटोमेशन. दैट सिस्टम डज नॉट एग्जिस्ट. How can I become bond investment educator so I can teach students? Sir, ये तो he wants your job, Dr. Shrimal. Do you want to any certification is required? Please advise.
So yes, you can, if you are a faculty, then in that case, you can approach to NISM. We do create the FDPs on the fixed income security. So faculties, those are teaching the fixed income into the colleges. So we are conducting the FDP for them. And in NISM, there was one module earlier, the fixed income security. Somehow it is discontinued from last 3 months ago. But we have created the e-learning module. So you can learn from the e-learning module and you can teach to the students.
One question: how do you manage credit risk in a bond portfolio, especially when dealing with lower rated or high yield bonds? Very good question. Anonymous user हैं, पर मैं आपको ये बता सकता हूँ कि you cannot short bonds in the country, right? So to manage credit risk internationally, best practices, people use different method. So let's say if you have a high risk portfolio of bonds, then they'll be very correlated to the economy in the country, right? So people do a long of credit, high yield and short equity in a particular sector. कि भाई उसका correlation होगा. India markets I don't think are that developed. So you should back test the model, how it has worked in the past, and then see if you can build, but they are usually a good credit hedge. Equity as a proxy for risk. How to sell the bond, sir? Please come on the platform, raise an RFQ.
But in that case, you must have the bond holding with you.
Yeah, you should have. You can't show. You can only hold an DMAT. Lot of repetitive questions. With the current 25 basis rate cut, why didn't bond price rise? Very good question. Maybe I'll take that. Market में एक behavior होता है, buy the rumor, sell the fact. I think the anticipation of the rate cut was so high that if you know 10-year bonds already rallied in the last year from 710 to 665 कि rate cut आएगा. So after rate cut, I think people just let off a little. I also think that the US plays a big role in this, just little academic. US may abhi, if you read the news, they are a little bit on a pause. They said we will see the data. In fact, today only the CPI data in the US will come out, which will determine. So अगर US pause में होता है तो emerging markets के लिए rate cut करना बहुत मुश्किल है, because your currency then moves a lot, which is also very important for an economy. The rate of interest is fixed or fluctuate. Most of the bonds we are talking about, the coupon rate is fixed. The rate in return you get is fixed, assuming you're holding it till maturity. How to find the latest bond offering, sir? Please, I would just suggest IndiaBonds.com. If you go, you will get latest bond offerings. Live 70 to 80 bonds are live at any point of time. ये हमेशा आता है, sorry sir, if I want to partner with you to distribute bonds with India Bonds, sir, please write to us at partner@indiabonds.com. We will come back to you. We are awaiting some SEBI regulation about distribution of bonds, but please come back to us. How do you help bond laddering for retirement funds, sir? As we said, we will not help, but when you are talking to your advisor, or you can come and trade yourself or invest yourself, you should invest in 1 year, 2 year, 3 year, 4 year different maturities. So your money keeps rolling all points of time and your interest rate risks are Very minimal. What bond you recommend for age 60? Again, हम recommendation नहीं देते हैं, but as we said, the older you go, more risk averse you become. So you should definitely invest, start from government securities, AAA or AA plus highly rated bonds. ये लंबा क्वेश्चन है, but I want to address it, Mr. Bhattacharya ka, sir, for you. What will be ideal asset allocation strategy for a 62-year-old risk absorber who has 30% of portfolio in mutual funds and stocks? Can put his rest of the amount in bank deposit, government bonds, and corporate bonds with an investment horizon of 10 years at least. What are your thoughts?
So yes, again, if you want to do the asset allocation, the strategy at age of 62, and if you have the equity exposure of 30% in the mutual fund or the equity, that will be systematically you can transfer it in the time of the corpus you want into this fixed income part. And again, to put the real the rest of the amount in the bank deposit, corporate bond or the government bond, that depending upon the time horizon, if you create the strategy as Vishal ji has discussed about the bullet strategy that you're talking, because at the your maturity you're talking about the 10 years, so you can select the various scheme based on the part of the investment and you can select it. Vishal ji, any
No,
input on it?
absolutely. I think if risk aversion is your thing, then please diversify and make a bonds ka bhi aap portfolio, you make a portfolio, right? Some government securities you can get potential capital gains, some in FD and some in corporate bonds. What is your call for investing in floating rate bonds, floaters? So floating rate bonds move up and down with interest rate, repo rate of RBI. So agar interest rate upar gaya, then floating rate gives you a high return. So obviously, if now we are reducing interest rate cycle, then floating rate bonds are not great instruments to invest because your coupon will get reduced. What are the documents I need to buy bonds? You you need only 4 documents to do KYC, not to buy bonds. It's all digital. You need your PAN number, Aadhaar number, bank account number, and TMAT number. आपको कुछ अपलोड नहीं करना है, no papers to upload. You can do a digital KYC by providing these 4 numbers. The system checks for you and verifies you. What is IPO in bonds? Maybe I'll take it. IPO
Yes.
means initial public offering. People equity, when a company issues equity for the first time, it is called an IPO, initial public offering. Bonds में हम bond IPO term is misused. It is called bond public issue because there are frequent issuers, right? So like Muthoot Capital on things, they issue 4 or 5 times. Market says incorrectly these are bond IPOs. So these are bond public issues. Public issues are a very good way of raising money because typically individuals get a slightly higher yield and you can invest from 1,000 or 10,000 rupees. Uh, Unlike equity, it's first come, first serve. So क्या होता है कि you don't have to figure out if the rate is right or wrong because it's an IPO or a public issue. You can decide your size and you will get the liquidity, whether you want to invest 1 lakh, 10 lakhs or 1 crore. And first come, first serve pe hota. There's no preference of allocation. If you are first, you apply straight away, you will get your full allocation. We are doing very good for time. We'll probably do 5 more minutes of Q&A. Can we check maximum invest in which bonds? Sir, you can try on the platform. 10 lakh 1 crore se bhi bonds hote hain. What role do bonds play in portfolio during period of high inflation? Sir, technical educational question.
Again, at the time of high inflation, what government will take a measure? Government will take a measure to control the liquidity into the market. So they will increase the rates, that will say. So when they will increase the rates, definitely the yield of the bond will increase into the market and the price of the bond will go down. So again, when the higher rates, higher interest rates or inflations will be there, if the government is increase the rate, the liquidity will reduce. And if the liquidity will reduce, the price of the bond will go down into the market to control the inflation. The government will take a measure on this.
Okay, there's some repetitive questions. Sir, आपके लिए फिर question है कि ठीक है, do I need a legal certification to be a teacher of fixed income bonds?
No, no. To teacher is nothing legal about this. But anyone can teach. So, but yes, if you're teaching the fixed income, our objective is that you should train the student. Rather, it should be skill-based teaching. So, if you're teaching something to the students, it should be more skill-based. That should be the objective.
There's one question: can NRIs invest in Indian bonds? Yes, NRIs can invest. What is the process and restrictions? Sir, that is a little longer discussion, not relevant for everybody. But if you were to sign up and just ask one of the RMs, they will help you, guide you to invest in bonds. Which bond is ranked higher, senior unsecured or senior secured? Sir, senior secured is ranked higher because it has a security. unsecured will be lower, irrespective of whichever company it is. Thank you, Mr. Gala, for your input. वो कह रहे हैं, why don't you launch bond case as per bond buying strategies which you discussed? Thank you for your input. I think right now we've seen our customers like a strategy depend on sector or the target. Which bond is good to invest, sir? Please do your search. Start from government security. If you are not sure, then move to AAA and then move. What are monthly income bonds? Simply, some bonds give you a coupon every month. तो लोगों को लगता है कि if I have monthly EMI, which we all do, then why don't I invest in bonds so I get some income every month? They are called monthly income bonds. I think we are coming to almost the end. Okay, I think we are doing very good for time. We only exceeded by 5 minutes, so we've come to the end of Q&A. Neha, over to you for closing comments, and then maybe actually Kapilji, if you have some closing comments, and then maybe I can just say, and Neha will go to you.
Sure. So again, with the help of the participations, Vishalji and the team, we increasing the level of the delivery in every webinar that we can see. So we started with a very basic definition of the fixed income security in the bond market, and today we are talking about the strategies. And again, whatever the participations will give the input, will come with another advanced topic on this. But yes, very interactive session, and keep investing into the market. That is the part.
Yes, from my side, thank you everyone for joining. It is our humble effort. We always think education is the biggest thing that we can contribute to people and financial markets. And really thank you to NISM being part of this journey. A couple of things. People have asked, where can you see our previous webinars? You can see on NISM YouTube channel. आप NISM के website पे, India Bonds के website पे, या India Bonds search करके YouTube पे, या NISM search करके, you can see Dr. Shrimal and my previous sessions. Certificate will come in 3 to 4 days. Please do not write to us asking for your certificate. That I'll leave to team NISM. But thank you for your encouragement. Again, thousands of you joined. Please write to us any suggestions for the next few topics. Neha, over to you.
So thank you very much for joining today's webinar. I would like to express my heartfelt gratitude for our esteemed speaker for sharing their expertise with us. A special thanks to you, our audience, for your participation and engagement. A quick reminder for all the participants, the certificates will be sent in within 3 to 4 days, and the webinar recording will be available at NISM Academy YouTube channel. So I officially close today's session. Stay connected with us for future webinars. Thank you. Have a great evening.
Thank you.
Thank you. Thank you, Nancy. Thank you, Vishal. Thank you.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.